I start dating myself when I start thinking about it.
Yeah, that's yeah. It's
All right, it's
exactly
going to be
right.
kind of
So
weird because I'm
Yeah.
just going to shut it off and
It's
turn
all
it
right,
on,
go.
okay?
Uh-huh.
All right, here we
and all
go.
of that. What's the best upcycle you've ever seen? Now, from an investor's perspective.
Hot mics.
'cause I know
All right. Hey, welcome to the live show. And I want to welcome quickly to the show by telephone, Ashley Patten. What's going on, man?
Hello, Tom. How are you doing today?
I'm doing great, man. It's always great to have you in studio, but it's also wonderful to have you live on the telephone.
Hey, live on the telephone. I love being live.
That's right, man. Yeah, always live is best, right?
Live is better than recording any day of the week.
Absolutely. So what do you got planned for the Christmas holidays?
You know, I'm actually, my parents are coming in town from Louisiana, so I'm entertaining my folks this week. What about yourself?
I'm actually going to stay in town the whole time. Only thing I'm trying to figure out is, do I want to do something for New Year's? I haven't decided that yet.
You know, New Year's to me is probably the one night of the week that I'm going to make sure not to be anywhere by a bar, because every bar has a cover.
Right.
You pay twice as much, and you spend the whole time waiting in lines.
Yeah, that's exactly right. Yeah, so I was thinking about just planning something, nice and quiet, maybe with some friends, that kind of deal. So anyhow, so let's get into talking about title, and let's get into talking about, because last time we were face to face, you were explaining what's going on with lease options and stuff like that, and it seems like every time we get together, you've got an awesome topic that you want to talk about. What do you want to talk about this week?
Well, this week it's what space? I mean, it's the proposed changes. E-notarization. Pretty soon we're going to be able to. Legislature just passed a law that says that now we're going to be able to close remotely via notary. And
hey, Nikki, can you turn him up?
Yes.
Thanks. Sorry.
Okay.
Go ahead.
Sorry about that, but yeah, that could be a game changer as far as now you can close, anywhere remotely.
Just having an e-notary, so describe that in practicality terms. What does an e-notary allow you to do?
Well, basically, you can go online and then have the closing at someone's house, and you could be in the office. So you're going to be able to actually physically close somebody anywhere in the world. I mean, it's just it opens up the doors for as far as convenience to where, you can have people closing in their office, at their home, and it's just not such a. Most people work for a living,
right?
And
absolutely.
So obviously, it's hard for people to get off and go to the title company and sit down for a closing.
That's right.
And so it's actually so several things have passed, and then legislative changes, and then there's it's just there's a lot of good things coming forward. I mean, they're changing compensation as far as home equity loans. Used to be you could charge a maximum of 3%, but then they had title insurance was included in that. Now it's going to roll back to where it's only 2%, but then there's certain other things that aren't charged. As, for instance, title insurance is not going to be included in those closing disclosures, and so people are now going to be able to do, a lot more different types of loans. And so a lot of times people buy property, then they pull money out of it. Well, if they live there in the property, obviously they're capped out at certain things for a home equity loan. But now it kind of lowers the standard a little bit to where it allows more people to utilize that service. And so buy a home, then if you need to pull equity out of your home, it becomes easier to do so.
That's fantastic.
Yeah, so it's a lot of good things coming down the line.
So when does the e-notary, when does that go into effect? Is that January 1st or is that later?
It's put this way. In effect, it goes in play. It's already in play right now, but nobody's utilizing it. So, I hope this is not another thing to where they give you a tool that no one picks up and uses.
Yeah,
it kind of like goes away of a Betamax.
Yeah, so I guess the advantage that a notary has when they're sitting right there, they can identify that it's you and that you're in your right mind, that you're not being taken advantage of if you're mentally challenged at that moment, all those kind of things. I guess the liability would shift a bit if the notary's not there to verify everything that's going on, right?
Well, that's exactly right. So part of the notary just looks at the person and see if they're okay. Of course, the one thing that you're not going to get on that is you're not going to be able to smell the breath, when you're at the closing table. So if they've been drinking, you can't really physically tell it,
right?
Because we've actually had that before. We've had somebody come to the closing, and we had to ask him to leave, and we had to reschedule the closing because the guy didn't know what he was signing because he was so intoxicated.
Yeah, that's not good. Yeah, that wouldn't, if as long as no one wants to sue in the future, that's not a problem, right? But if anybody wants to challenge that title in the future, which when there's money involved, there's a strong possibility that there's a lawsuit involved, right? And so, yeah,
that's exactly right.
Yeah,
and between a void contract and avoidable, and that's one of the cases that's avoidable, and the only one that would want to avoid that is the person who's responsible to pay.
Right. Yeah, that's exactly right.
So, the lender, on the other hand, is going to say, hey, you knew what you were signing. The guy was like, no, I didn't know what I was signing because I was intoxicated.
Yeah, right. Wow. I bet you get in some crazy stories like that over and over and over again.
Unfortunately, we do. The radio show's not long enough for us to go into all of them.
Yeah. So is there a particular story that sticks out more than, kind of like a year in review? Is there a particular story this past year that sticks out more than another that you can change the names to protect the guilty?
It's not one I can think of offhand. I'll probably, next time I'm on, I'll be able to tell you a very good story. But right now, it's just there hasn't been any of these crazy. Like, for instance, I've had one closing. This is probably about 4 or 5 years ago. It was with a guy getting divorced, and his ex-wife, or his wife soon to be, had basically it was basically he was stalking her.
Okay.
And so it was one of those situations where we ended up staying here probably at my office till probably 8:30 or 9 o'clock at night, waiting for everything to calm down. And so his ex-wife had a thug for a new boyfriend who was basically camping out downstairs.
Oh, that's no fun. I think the craziest story we had this past year, we had a situation where mom and dad were married, right? They had a bunch of kids, and then there was a previous family that dad had been with, a different mom, had another complete family. One family didn't know about the other family, so when they found out that another set of kids existed, then the first family, they knew about the second family, but the second family didn't know about the first family. So they were all share alike in terms of the ownership of the property, but the ones that had just found out there was they thought they were getting all the money because it was their dad most recently, right? So they thought that the four of them were each going to split 1/4 of the property. Turns out there were 3 kids from the previous marriage, so those 3 got the first half and the other 4 got the other half, so they were all getting an 1/8 instead of a 1/4. And so the second family, they were mad at the first family for taking part of their property. The first family was mad at the second family because they really blamed that person's mom for breaking up their family, right? So,
unbelievable.
Yeah, sometimes you get into some crazy family stories when you when you get into all these title issues and broken title and dirty title and all that kind of stuff. And you gotta, we have a forensic genealogist in our employ full time, and so we're able to track down who the right people are. And it gets really, really crazy sometimes when people are like, no, you don't understand. And then you probably run into situations where somebody was raised by a particular dad, like he's his own son, has the same last name and all that, but the person was not really biologically their kid and was never adopted by the dad, and they feel as much a part of the family as anybody, but it doesn't, just because you feel like part of the family doesn't mean you inherit like part of the family, right?
Oh, yeah. I mean, most people don't realize in order to adopt somebody, the person being adopted has got to have no other parents. And so the parents have got to disclaim their rights, to their children in order to let someone else adopt them.
Right.
So you can't be adopted if you still have a biological parent who is still listed as the legal parent.
Unless that biological parent signs off and relinquishes their rights.
That's right. That's right. And I mean, and the courts want what's best interest for the child, And the courts basically presume that the biological parents are what's best for the child, unless the biological parent surrenders their, surrenders their parental rights.
Yeah. So,
That's one thing that the affidavits of heirships all talk about is, do you have a biological child or do you have a child that has been adopted? Not adopted in name or principle, which, Texas is one of the few states in the country that you can adopt an adult child. So, Tom, even you could be adopted by a billionaire.
Yeah, that'd be.
It's not too late for you.
Yeah, right. Hey, I wouldn't complain about that, but I'm happy with the family I've got, to be quite honest. So, all right, you've been listening to Right Path Real Estate Radio. I want to give out Patten Law Firms. This is Ashley Patten live on the air. It's plfpc.com. That's P as in Papa, L as in Lima, F as in Foxtrot, pc.com. plfpc.com, 713-621-5808, 713-621-5808. See you on the other side of the break. Thanks, Ashley.
All right, thank you. Appreciate it. All right.
Mike's off.
All right.
As
Jennifer
a real estate
should be.
investor, you
Is
rely
she in
on your
already?
Property inspector to determine
Jennifer's
the
on
current
hold.
condition
All
of
right,
the
cool.
home and your potential return on investment. Principal Inspections was founded by investor Jeremy.
Oh
Humphrey
my,
to do
oh my.
just that. Working from the investor's point of view, Principal Inspections
to
will
edit
give
that.
you turnkey
Right.
inspections that are high quality, affordable, and focused on information pertinent to investors while not clouding the report with unnecessary details. Founder Jeremy Humphrey comes from a family of real estate investors. He started Principal Inspections for investors because as an investor himself, he experienced the need for fast, quality inspections with information directly pertaining to property condition and potential resale value. Principal Inspections will save you time and money. Call Principal Inspections, 832-684-5516. That's 832-684-5516. Or go online to principalinspections.com. That's principalinspections.com. License number 21264.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake
So
real
we got
estate
3
investors
minutes?
make is not understanding the potential liability that
No, a little
exists
less,
from
but
owning
yeah.
real
All right,
estate.
be right
At
back.
Anderson Business, Legal,
Okay.
and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
All right.
This is Business 1110.
Call Tom at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hot mic.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817, 713-785-1817. Join live via telephone. Jennifer Hernandez, the Hernandez team, Legacy Mutual Mortgage. Welcome back.
Good
Welcome
morning.
to the show. How are you?
I'm doing great. Thanks for having us on again.
Absolutely. So we had a wonderful time at your party. It was awesome. You throw a great party. Beautiful house.
Thank you.
Yeah, all of that.
Yeah, it was fun.
Yeah, it was a lot of fun. So what's going on in the world of mortgages, retail mortgages? What's happening?
We had quite a few contracts last week. I mean, retail, there are buyers out there. So if you're a seller, I know at this point of the year, it always starts to lull right about now.
Right.
January is going to be the mad rut. I really feel that a lot of people are going to put their house on the market. That's just what I'm hearing. People are like, oh, well, I'm not going to put it on the market during the holidays. This happens every year.
Right.
But I feel the momentum building. I think that it's going to be a really busy spring. It's been a really busy December for us. Historically, I think we'll close about 21 loans. So for us, normally I'm like 15 or 16. So, I mean, we've seen an uptick for sure in closings this year. So, and they're not flood victims. I mean, they're just people that just want to buy a house. So I think it's.
Now, are these people that are upsizing? Are they downsizing? Are these people moving in from out of town? Are they from out of state, out of town, something like that? So what's going on?
I get a mixture of everything. I have realtors and referral partners that just span the whole city. So I do have people moving in. That is one of the dynamics. A lot of first-time home buyers. I've seen.
So these are people typically graduating from college, or they've been in the workforce for maybe 4 or 5 years, and now they're moving out of multifamily into owning their first home.
Yes, or it's just a young married couple. I get that a lot where there's just a nice young married couple in their 20s, early 30s, and they're buying a house to have a young baby. So, I mean, I get a lot of that, and I do have a couple of flood victims that I did close this month, actually. So I had a couple of those. They were older, they were older people. So,
right.
Yeah,
maybe we're looking to downsize anyway, and then their house flooded, and because of that, it's like, hey, let's mix these two together. In fact, I recently got a referral from an investor that is not active anymore, and he sent me over a text over the weekend, and he said, hey, my next door neighbor, was looking to downsize anyway, house flooded, he's not looking to rebuild, they've already found another place. Here's my key question, though. Have you come across your desk? I'm going to ask you this every time until you tell me yes. Have you seen a flooded house that was sold to an investor, then rehabbed to flip ready, retail ready, and then an end user owner occupant want to go in, buy that house at retail? Have you seen that yet?
I'm not sure because we don't always get word that it's flooded necessarily.
Okay, right.
Well, it would be in the appraisal, so I don't have that yet.
Okay.
But we have several. In fact, I wanted to mention this just as a word of advice for people that, if you're selling a property, let the lender know early. I mean, I find out really quickly. I got a contract yesterday that I looked it up on HCAD within 5 minutes of getting the contract. And I said, hey, the name on HCAD was one investor name. It was an LLC.
Right.
And then the contract had another name. So, I mean, I know properties well enough because I deal with you guys all the time.
Right.
I've gotten really trained. But not every lender is that way. And I knew within minutes. I was like, okay, this is a flip. This property was wholesaled.
Right.
What's the date?
Right.
Are we within 30 days? Were we 90? Because I have a couple of investors, I was pricing in my system. I was pricing Chase because they have really, really fantastic rates for us. and they will not. If it's
Yeah, they won't
within
do it less than 90
they
days,
will-
right?
No, I can't do it. Yeah, even on conventional. And then if it's 91 to 180 days, they have a huge uptick in pricing.
Yeah, it's not
So
it's
it
not the same,
affected-
right? They consider that a higher risk property, right?
So what's going to happen is I don't know if every lender does. Well, in fact, I know they don't do the diligence that I did in 5 minutes. It might take them 2 weeks to do it.
Right.
And find out later.
Yes.
It's going to be a hiccup at some point. I'm just telling you. They are going to find out. And so do them a favor and do your transaction timeline a favor. Just let them know, because then, I'm emailing the agent. I'm like, hey, can you find out, what's the date? Can you just tell me the exact date? Like, listing agents, in my opinion, should offer this information immediately, because why not know the first day or two of the transaction so that we can be prepared and be really proactive on it,
right?
Rather than waiting when we're behind the 8 ball and we're already way into it. We're like, oh my God, we've got to switch gears, and just do us a favor. So
well, then the customer, the person buying the house, right? That is y'all's customer, also the buyer's agent's customer, all that. They've been quoted one rate, and it's not that you're doing a bait and switch. It's just that based on the information you had at the time, it's that the information changed as you're reading the information. But the problem is that the buyer's thinking, well, I was up front with all this from the get-go, and they don't know that the seller, they don't know, and they don't know the impact. So it's like, wait, why should I be punished because I want to? I mean, it's like how long the person owned the house before me shouldn't matter on my rate, right? But it does.
That's exactly right.
Yeah.
Oh, it does. And now this client, I was quoting him a certain rate, and it was just an A tire, which isn't, it was a smaller loan, so it was like $6 a month. Which,
right.
I mean, it's $6 a month, but
sure.
It wasn't drastic.
Yeah.
But you're right. I mean, if I tell them 2 weeks in, they're like, wait a minute, you're the expert.
Yeah, right.
I do not know this. So we do unravel it really early, because you guys have us so super trained. Thank you so much. I'm very grateful for you guys.
Yeah, no problem.
Wonderful.
Yeah.
Over the years to work with.
So now Glenda's asking a question on Facebook. She asks, so do you have to wait 90 days before you can resell for FHA and conventional on a flip?
So I'll answer the first. Thanks for the question. On FHA, we cannot assign the FHA case number until the 91st day. So we can get in contract a week or two before, and then we just change the execution date. So we'll get started on verifications and whatever, and we'll app them. I just can't order that FHA case number to be able to do, behind-the-scenes due diligence and order that appraisal.
Because we've actually closed with you guys, I think on like the 92nd or 93rd day. So it's not like you can't contract. You have to have a lender that knows what they're doing, because there is a way to time it just perfectly. Because they say you can't do it for 90 days, but most contracts are 30 days in advance, and they don't even want you contracted in that length of time. But they'll let you contract and close on the same day as long as it's after 90 days, which is kind of crazy, right? So you kind of have to have a contract that you don't open. So if you want to know how to do that, get with the Hernandez team. It's jennifer.legacymutual.com. It's jennifer.legacymutual.com. 713-579-3600. That's 713-579-3600. So, yeah, great question. What else? Jennifer, I think you were, before that question, you were about ready to say something else.
Well, first I want to answer the second part of her question, which is conventional. So in conventional, we can close. In fact, we've done one for you guys, Tom, that was less than 30 days. It just happened to where you guys didn't really need to rehab it.
Right.
So we could do it, but I only had one investor I could sell it to, because we have a dozen and a half investors that we sell to, like PennyMac and Chase and Wells and BBT, and they all have different rules. So if it's less than 30 days, there's only a couple of them that'll do it. When it's 31 to 90 days, there's another bucket of investors that are okay with it. And then, 90 to 180 days, it opens up a little bit more. But they all it affects the interest rate big time, because it just does. And they're like, yeah, we'll do it, but there's a premium for it. And you're right. I mean, why should the buyer suffer because their buying that kind of a property, but we have to tell them in the beginning, but we're trying to keep them committed to your house and be like, no, this is a great deal. Like, you still need to take this even though it's a quarter higher or whatever.
Yeah, right.
But they don't understand, you
2
know.
minutes.
So that's where it's really important. But hopefully that answers the question of the person. But before then, I can't remember what I was going to say.
Well, we were talking about, have you seen a flooded house that you knew that an investor had bought, rehabbed it till retail ready, and then have bought that flooded house?
I have not yet that I know of. I've got a couple under contract right now that I guess I'll know when I get the appraisal,
Okay.
you know, because we will see that in the comments.
Well, and don't you,
I
before the
haven't had one
appraisal,
yet.
do you get a copy of the disclosures and all that from the seller to the buyer?
You know, we do not.
Okay, I didn't think
not
so.
Take the seller's disclosure because we don't have to submit it.
Right.
And I just shred it. I just don't really.
Don't really
I
want
read
it.
no.
Got it. Okay. All right.
I really don't. So
and then
I
the
don't
other thing is
spend time on
that you know, I had Ashley Patten with Texas American Title on before you, and he was talking about notaries. So is that going to change y'all's business at all?
1 minute.
You know, I don't know. So they're starting to allow electronic notaries.
Correct. That's what he said. Yeah, for title.
I haven't gotten the ruling on that yet. I know on Texas Cash Out, if you're cashing out on a primary, you can't have a notary anyway. But, you know, I don't know. That remains. I'll have to ask our ops people about that.
Okay.
I don't know.
Sounds good.
That's a good question.
Yeah. We try and bring
that's where
good
the
questions.
industry's going, that's for sure.
Yeah.
Yeah.
Okay, so you've been listening to Right Path Real Estate Radio. I'm joined live by telephone, Jennifer Hernandez. She's the Hernandez team. Jennifer, that's JENNIFER .Legacy Mutual, LEGACYMUTUAL.com, 713-579-3600, 713-579-3600. Jennifer, thanks so much. Have a Merry Christmas.
Awesome. Yeah, you too. Merry Christmas.
All right, bye.
Bye.
Mic's off.
All right, thanks. And Jerry's here in the studio, so he's going to put his headset on. We'll do a mic check.
Are you expecting to close accurately, on time, and with
hi,
lots of
Jerry.
communication on
Nikki.
your home purchase? You've come to the right place.
Checking.
I'm
1, 2,
Jennifer
3. Checking.
Hernandez,
1, 2, 3.
Senior
All right,
Loan
turn Jerry
Officer
up a little
with
bit.
Legacy
Okay.
Mutual Mortgage. Our
Shocker.
goal is to give our borrowers and referral partners
All right,
an
Jerry, go ahead and
amazing
talk.
Checking. 1,
experience
2,
during the
3.
loan
Checking. 1, 2,
process.
3.
My
Okay,
team
that's
believes
it.
He has
in
such a
putting
soft
people
baritone
and
voice.
culture
He
before
does.
results.
Yeah.
Our company
I think it's my
concentrates
morning voice.
on
I
Is that what it
building
is?
those
Over
teams
time.
Yeah, you get louder?
structure,
Yeah.
Throughout the day, I get a little
process,
louder.
and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9%
So have you seen a
return and up to a 13% waterfall.
a retail flip
Call us today at
go yet
281-915-0906
that's been flooded?
No, not yet.
Or visit our
You?
website,
No.
jbfundservices.com.
We're actually we're closing. No, we had a house that most of the houses that we have contracted that were
Real
flooded,
estate investors,
we've either
if you're not
wholesaled or we've
familiar
kept
with
as a buy and
Quest
hold.
IRA, let
And
me
then
tell
Jason
you
and I,
what
we have a
you're
goal to
missing.
grow our
We've
own
got
buy and
free
hold
weekly
portfolios
educational
this
classes,
next year.
networking
But then
opportunities, and the ability to tap into trillions
we're
of
closing
dollars
on
for your
January
real estate
10th
investing
a true
deals.
retail
Come by
higher
our
end
office
house,
or join us
like
remotely as we
probably a
simulcast
$500,000
all of our
pre-flood ARE.
educational classes
Yeah.
That
every
we'll
Tuesday morning
we'll do a
and evening.
$70,000,
For more
$75,000
information,
rehab on.
Call us at
And
1-855
try and sell it
Fun
retail.
IRAs or visit our website at
You know, I know some people who do a lot of
questira.com.
BPOs,
Time is money in a real
and they're
estate deal.
being
If your
flooded
insurance company is
Yeah.
slow or
with
non-responsive,
BPOs
you can
Yeah.
lose a deal
right now.
Yeah.
like that.
So
You need a quick
they're
turnaround on
thinking that
quotes, binders,
about
and the
3 to
agency
6
for that is
months that
Benchmark Insurance
Short
Company.
sales?
short
The
sales,
team at Benchmark
foreclosures,
understands the investor
all
mindset.
that.
They know what you need.
I don't
and
know
who
that
needs
there's going to be that
what's there
many
for you.
foreclosures because I don't
Leading real
think.
estate risk management
My personal
experts.
opinion is I don't think
Benchmark
these banks
Insurance
want to
Group
own
of
these assets
281
because of the
569
liability.
4353.
So I think it's going to be short
281
sales, and then I think that if they can bundle up
4353.
enough of them, I think they're going to
Online
let
at
big chunks of them go
benchmarkbrokers.com.
in non-performing note sales.
Yeah, but then the asset managers side of things, I mean,
Right.
it's a mess.
Right.
To do that many, you know, at one time.
Yeah, you have to get them a discount, right?
Yeah.
But so it's. I think that banks are going to. Well, look at how much resources it takes to do short sales. You know, between the BPOs and all, you know, the back and forth and making sure that they're getting full value, or do they just unload 10,000 of
30
these,
seconds.
you know, at 50 cents on the dollar or whatever that number is of unpaid balance? You just write it off.
Yeah.
I mean, they're going to lose money either way, right?
Yeah.
Because the equity value was lost. And then I wonder, are mortgage companies going to start requiring flood insurance as part of the mortgage, even if it's not in a flood area, right? 'Cause that's really, you stop and think about, if they're lending 97 cents on the dollar of an appraised value because they're only requiring 3% down, how do they protect their equity? Because it's
Taxes.
if you don't have
Just
flood
the sound
insurance,
of that word
it's
makes
that real
people
loss of value, and if
cringe.
people
At
just walk away from the
Anderson
house,
Advisors, we provide tax
it's
protection
the bank
and
left holding the
asset
bag,
protection
right?
for real
That or
estate
push their
investors
appraisals
throughout
down.
the country.
Right.
Our unique
Yeah.
philosophy has CPAs,
One way or the other.
lawyers,
Right.
bookkeepers, and estate planners
That's true. I
with
didn't
one
even think about
common
the
goal, helping you, the real estate
the flood
investor.
insurance side.
Check
Even
us
if it's not in the
out
flood
today
zone,
at
what does it matter?
Yeah,
At this point.
well, because
And
some
don't
of them
forget
in
to tell us
500-year
what you heard about
floodplains,
us at
Yeah.
Right
I mean, at
Path
least in
Real
a
Estate.
flat area like the Gulf Coast. I mean, maybe don't do it in Montana or someplace like that, you know, or Colorado.
Yeah.
Call Tom at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hot mic.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. We did a quick change during the break. I'm joined live now in the studio with Jerry Ta, PropertyCareHouston.com. That's PropertyCareHouston.com, 713-489-7653, 713-489-7653. So what are you seeing? I always love our radio show sponsors that, because of the number of clients that you have, and we can kind of through the radio show get a pulse on what's going on in the marketplace between the retail lenders, the appraisers, the inspectors, the property managers. You represent that side of that business. What do you see going on with investors on the buy and hold side? Are people adding to their portfolio? Are they shrinking their portfolio? What do you see going on?
Well, I think right after the hurricane, there was a lot of excitement.
Yeah.
And that excitement has completely gone away.
Okay.
I think
on the investor side, that excitement has gone away.
Yeah, for the people that I've talked to, they thought
Sure.
that I guess they thought the process would come along
Faster?
faster.
Oh yeah, no.
So they were expecting, buying a bunch.
Yeah, like right away.
Yeah, right away.
Yeah.
But patience, I guess, is a virtue. So.
Well, and what I think we're still probably 3 to 6 months away from the big push of properties that are going to be available actually coming on the market, and I think that's going to be the beginning of the wave. Right. And I think we're going to have about a 2-year buying opportunity from pretty much now.
Yeah. I think it's better for you and me.
Yeah,
that's what I come up with. Like I said, the moment the hurricane happened, everything kind of cleared out. I had all these calls and emails, just like, hey, think about investing in Houston. Just email and call after call, and now that's just kind of dissipated at this point. I guess they're not, willing to wait, or they thought maybe it's really nothing.
Yeah, I don't think people realize that although the city got back to work and the roads were open and all that kind of stuff, their crews working like crazy. And then, a lot of people, what I recognize is, maybe half the folks are rebuilding for them to stay in the house themselves. Mm-hmm. But that's like 130 out of 266,000 houses. I think that's the estimate that Jason and I have come up with, is about 266,000 houses that flooded. Mm-hmm. So if half of those get rebuilt, I mean, the manpower it takes to rebuild 130,000 houses is a lot. That's a lot. Mm-hmm. But then that still means that there's 130,000 houses that aren't. Mm-hmm. And so, over the next 5 years, I mean, I know Jason and I each would like to add about 125 houses to our rental portfolio.
Right.
And which, 125 out of 130,000 is not that many.
Yeah.
I mean, it's 1/1000th.
You're trying to get
so
a lot.
It's 1/10 of 1%, right? It's not. It's not really that many. I mean, lots of people could do that exact same thing.
Right.
And that's not taking into consideration all the other houses that would normally be going for sale anyway, right? I mean, that's now if 130,000 houses sell in the next 2 to 3 years, when historically on HAR we've only had about 80-something houses that have been selling in an entire year. So you add another 130. Now, I would think that would probably happen over a 2 to 3 year period. But that's still, between 40 and 60,000 extra houses. I mean, it's
a good increase.
It's a huge increase.
One way or the other you look at it, it's going to be a huge increase. I mean, do you think, I think when like the hurricane in New Orleans happened, all these people moved over. You're like, oh, like, there's 100,000 people that moved from New Orleans to Houston.
Right.
You think a city, a metropolitan area of 6 million people can just simply absorb that? Like, no, that's not the case. That's still a significant amount coming on at one time.
Yeah, that's exactly right. Yeah, so I think it's going to be a tremendous buying opportunity, but it's been 4 months since the storm, something like that.
Right.
That happened in September.
Beginning of September, end of August.
Right. So,
almost 3 months.
Yeah. So almost 5 months.
5 months.
Yeah. It's almost 4 months. Almost 4 months. Yeah. Which, I mean, so much has happened in that length of time. It seems like forever ago. I mean, I know we've been slammed in the last 4 months in a good way. I mean, in a really, really good way. Business has been good. Yeah, busy's really good. And then we normally do really well in December. Always historically, one of our biggest months of the year every year for buying houses has been December.
Don't say that out loud.
Yeah.
that was actually the case for me too. Surprisingly, I think a lot of people take off.
Yeah.
And they don't stay up to date, and
they don't market as much.
Yeah, they don't market as much because they're out of town. It doesn't make sense.
They don't want the leads coming in, so maybe they're spending $5,000 a month in marketing, and they shut it down in December. And we actually crank it up in December because we recognize we're getting more bang for the buck, and we normally do way more than 1/12 of our annualized volume in the month of December.
Right. And I think on the flip side of it, on the sell side, is that
no pun intended, right?
Right. People have free time to okay, now I got a little time off.
Yeah.
This house that I need to get rid of, I need to get rid of now because otherwise, once the holidays pass, I'm going to go back to work and I don't have the time to do anything.
Right. Well, and the other thing that we're seeing is it's just now where insurance companies are kind of closing out. And so that not only have they told the insured how much they're getting, but the people are actually receiving those checks. Like I just got a text on Sunday from a guy that I've known for a bunch of years from the early days when I was just starting Fast Track. He was one of my very first customers. We've stayed in touch and become friends and all that. And he goes, "Hey, my next door neighbor is." Just got a check for $150,000, as his flood insurance check, but it just came in like this past week.
Right.
And, it's one thing for the insurance company to say it's coming, but you don't really know it is coming until it actually gets here.
Into your bank account.
Yeah. And so they're just now like, who do we talk to? And then, this next door neighbor said, well, I used to do this a lot and I don't really do it anymore, but if there's one guy that I would trust and, would refer any family member or friend to and, be able to sleep easy, that, you always have to be nervous who you refer, right?
Right. And it comes out bad. And
right. Yeah, exactly.
What was your experience with this guy?
Yeah, right. So he feels comfortable, referring me and so I feel... But, you realize just the timing on this is taken, insurance companies don't move overnight. It's like moving a big battleship or an aircraft carrier.
What's interesting is that where, like, the people who are now getting checks, where have they been living?
Yeah, well, a lot of them, I know that until recently they were staying in hotels, and I've talked to a bunch of them that are living with friends and family.
Right.
And either friends from church, where they just have taken on an extra spare bedroom or something like that, or living with family, parents are living with kids and kids are living with parents. And when I say kids, I mean, 30-year-old, 70-year-old parents are living with 30 and 40-year-old kids. And they're just kind of bunking up together.
Yeah.
And, but I think it's been, until just about 2 weeks ago, maybe a month ago, there were still a lot of checks being, I went out, I talked to a guy in Bear Creek and he and his family were living in a long-term stay, hotel.
Wow.
And, with the kitchenette and all that kind of stuff. And they've been living there 3 months.
Yeah. And
Yeah.
those are stories you just never really hear very
Yeah.
often. The storms pass, and you don't hear the people still, kind of struggling and trying to get things together.
Well, in fact, we've been doing our weekend retreat since the event, and so the hotel that we've been having at the weekend retreat, it's amazing just to kind of see, the folks that have been living there ever since the storm. And here we
Right.
come in for a weekend, and
Mhm.
probably 85 or 90% have been FEMA folks.
Wow.
That have been displaced, and FEMA's. You and I are picking up the tab for
Yeah.
the hotel room at the.
People don't realize where the government gets their money from.
Yeah,
That'd be us.
Comes from the people paying taxes.
Yeah.
Yeah. So, all right, you're listening to Right Path Real Estate Radio, PropertyCareHouston.com. Jerry Taz in the house. If you want to ask any questions about property management, 713-489-7653. That's 713-489-7653. One of the things that we always recommend in our educational classes is let the 10s do it. That's like we've got a hashtag let the 10s do it. And, we have the skill set, the capability, the smarts, all those things to be able to manage our own properties. Because at the end of the day, managing a property is not rocket surgery.
No, it's not.
But we're not a 10 at that.
Mm-hmm.
And what we find is that when we've managed our own properties, our properties are the ones that are the last ones to get maintenance done on them. Our properties, no one really makes, because our properties, the problem with when we own properties within Houston House Buyers is there's no I don't own them, Jason doesn't own them, our office manager doesn't own. No one person owns them. It's the entity that owns them. So there's no one that really manages them like they're their own property.
And nobody wants to spend the time to do it either.
That's correct.
It's someone else's responsibility.
That's right. That's exactly right. So our properties always get the most mismanaged when we're doing it ourselves. That's why we turn it over to Property Care, and y'all do a fantastic job for us. So
that's good
thanks,
to hear.
Thanks for that. So if you want to call Property Care, it's PropertyCareHouston.com, 713-489-7653, 713-489-7653. What are you seeing in terms of days on market for how long it takes to lease a property right now, assuming that it's ready to be leased?
Again, it's always depend on the property in the area.
Right.
But we had a property that just went on the market, I think last week, and
yeah.
I mean I'm already seeing a lease out on it. So it just really depends on the quality of the house, getting it as nice as possible in its area that actually rents.
Yeah.
Keeping it fresh is really important to us now.
Yeah, you've got to keep it fresh. Okay, in terms of flooring, what do you see as the best flooring for keeping a property fresh longer term?
I keep telling all my investors we're completely moving away from carpet
Yeah.
and going with the vinyl plank. I have a lot of friends that live in apartments in Midtown and the Heights and stuff.
Yeah,
and
high-end apartments, Class A, high-end.
And they're all using vinyl plank
Right.
or the stained concrete.
Yes.
Majority vinyl plank.
Yeah. Now, you're talking about the glue-down vinyl plank, correct?
Yes.
Yeah.
Mhm.
And so even doing that in the bedrooms and everything like that. So our families liking it in the bedrooms?
Perfectly. And between that and just the allergies,
Right.
now most doctors, you have allergy symptoms,
Right.
they don't even want you to have carpet
That's
at
correct.
all. I mean, if you want carpet, you can really put a rug down and
Right.
almost get the same effect.
Absolutely. And then let the tenant be responsible for the rug.
Right.
Right. All right, you've been listening to Right Path Real Estate Radio, PropertyCareHouston.com. That's PropertyCareHouston.com, 713-489-7653. 713-489-7653. Thanks for coming in, man.
All right, thank you.
All right, thanks. Have a Merry Christmas.
You too.
All right.
Mic's off, guys.
All right, all right. Okay, I'll be back. 3 minutes?
4.
4? All right.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how
20
JB
seconds.
Fund Services offers a 9%
And is Fast Track coming in
return
to-
and up to a 13% waterfall. Call us today
their
at 281
Oh, is that what they're doing?
or visit our website.
Is that why they're there?
I showed that they're coming in at 10:30 today to do a commercial recording.
Oh yeah, that's for the Facebook.
Okay, got it. No, for Facebook or for this is their training that they're doing for the website.
Call Tom at
That's what it is.
713-785-1817.
I think it's the Facebook
And look
commercial.
for us on Facebook Live
All
at
right.
All right, stand by.
facebook.com/RightPathRealEstate.
Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817, 713-785-1817. So, want to tell you about events that we've got coming up. Yesterday, if you didn't hear the show yesterday, you might want to go back to the podcast. It's the cost of not. You know, everyone knows how to calculate the cost of doing something. Rarely do people take the time to calculate the cost of not doing something. Because for every decision that we make, oftentimes we say, hey, we're going to decide not to do that. You know, there's a cost for not doing something. And one of the examples that I gave was that I've been taking vitamins, about $200 a month worth of vitamins since really around December of 99. And so people used to ask me, how much do your vitamins cost? And I said, well, if you take them or if you don't. Because there's a cost for taking vitamins. You know, you're investing in the vitamins. There's a cost for not taking the vitamins. And what's amazing to me is that we oftentimes rely on doctors as our healthcare professionals to give us advice about how to be healthy. When the reality is that in Western medicine, most doctors, they're taught how to diagnose problems after the fact and then treat the symptoms. I mean, very few of the, except for acute care issues, you know, like accidents and, you know, things like that. But they, very little, in fact, most doctors, they have no training in nutrition, little or no. I mean, you know, very little training in nutrition. And so most of them say, oh, yeah, you just eat whatever you want and you'll be healthy. And it's like, no, it's not accurate at all. Most doctors are like, yeah, you get all the nutrients you need just from the food that you eat. And it's like, no, if you really look at the research, that's That's not accurate at all. So if you want to learn how to grow your wealth in 2018 or how to grow your income in 2018, then what you need to do is you need to show up at our free webinar today. Go to rightpathrealestate.com and register for the webinar. You're going to learn how to grow your wealth and your income. Just go to the events section. It's under upcoming events. It's today, December the 19th. It's going to be at 7 o'clock. You could be in the comfort of your own home. You could be, I don't recommend driving and listening to the webinar because it's going to make you want to think about something other than driving. You want to give all your attention and effort to the driving itself. Or if you want to hear it live in person, come to 9999 Westheimer, the West Chase Hilton. Again, we need you to register for that event. It's on Thursday, December the 21st at 6:30 p.m. Again, it's free to go to, but all we ask you to do is invest your time and register for the event. And then our next weekend retreat, people are already signing up for the event. It's filling up fast. It will probably be sold out before the event actually gets here. January 19th through January 21st of 2018.
30 seconds.
Got to go to the website to register for that as well. You know, the number one thing that we focus on is we teach you the tactics of marketing, sales, all of those things. We teach you how to do the real estate, but the main thing we focus on is your mindset. In order for you to be successful, you got to change your mindset. Jason will be in the studio tomorrow. Thanks for listening, guys. Have a blessed and productive day.
All right, Mr. Perry.
Thanks, Nikki.